Hey, it's Tax Quips time from TaxMama.com. Today, Tax Mama hears from Gordon in the Tax Quips Forum who wants fairness. He says, in 1996, I purchased a leasehold interest in a lot in a recreational vehicle park. The lot is on leased land owned by someone else. Since there was actually no real property, I assumed I would not have to pay capital gains taxes when I decided to sell it. But I discovered several years ago that the IRS considers leasehold interest to be capital investments, which are therefore subject to capital gains tax upon sale. The upshot today is the lease is approaching expiration, and the owners have decided not to renew it, offering no compensation to those of us who've invested in the park. Yes, there's a lawsuit underway, but that's another subject. My question boils down to, can I claim a capital investment loss since my leasehold interest has essentially been disposed of without my consent, eliminating the opportunity for me to sell it and recover my investment? Well, Gordon, the wonderful thing about our tax system is that we've got to pay taxes on the profits of anything we sell. Does the same thing apply to deducting our losses? Not hardly. Losses on the sale of personal assets are generally not deducted anyway. Consider the loss on the sale of a home. Not deductible. Consider the losses on sales of household goods, like garage sales. Nope. But the sales must be reported, even if we're showing zero profit. So, how does this apply to your leasehold? Well, it sounds like it was purchased for personal use. You mentioned a recreational vehicle, which sounds like fun. So, if you sell it at a profit, the sale is taxable. Now, even if you were to sell it, how would you compute your basis or tax cost? When you buy a leasehold, it's a lease. You buy the right to use something for a specific period of time. So when you sell the leasehold, you're only selling it for the right to use it for the remaining months of the lease. Your basis isn't going to be 100% of what you paid. So suppose you were to have sold it in 2006. You'd bought a 15-year right. In 2006, there were still 5 years left to go. Your basis or tax cost would have been 1/3 of your purchase price. In other words, 5 years left out of the 15 in the original lease. When the leasehold ends this year, your basis is 0, or 0 over 15. So unfortunately, there's no loss to report. You've used up all the months of your leasehold when it expires. You didn't actually make an investment. All you did was lease something. Good luck in trying to get it renewed or getting compensated. And remember, you can find answers to all kinds of questions about capital losses and other tax issues free. Where else? At TaxMama.com.